I'd like to ask you, Jay Connor, what is the biggest risk?
So let me get a little clarification on that, Darren. So are you asking what's the biggest risk from the standpoint of the borrower, a real estate investor, or what's the biggest risk from the standpoint and perspective of the lender, the private lender?
There's no framing of this. It's how you choose to frame it. So
Well,
so blank screen. Yeah.
I'll quickly answer both.
Okay. All right.
So what's the biggest risk for you, the real estate investor, that you're borrowing money? Well, one big risk is you better know what the real value of that property is. How are you determining what the value of the property is? Well, in my case, I've been doing business with the same realtor since 2004. My realtor tells me the after repaired value of my property. So you've got to have a firm grip and credible way of establishing what's the value of the property. Number two, what's the risk? You need to know what's the maximum that you should pay for a property all cash. What's the maximum you should pay? I mean, what is your formula, right? So you need to know, and of course I got the formula, what is the maximum you should pay for a property? What's the third risk? Who's on your team? Who is on your team? Like, I sure don't do this business by myself. My team, I mean, I'm like the orchestra director, right? So who's on my team? Well, I can't do this business without my realtor and a relationship there. I for sure can't do this business without my real estate attorney. I mean, my business is at big risk. If I don't have a good real estate attorney, I've been doing business with the same real estate attorney firm since 2003. I get my title searches in 24 business hours. Speed. You can't make money in this business in slow motion, right? So I got to get my information. I got to get my title searches quickly. Thirdly, if I'm in doing rehabs, who's on my team as far as my general contractors? Who's getting the job done? So my biggest risk, your biggest risk is number one, who's on your team? Number two, and the team member is going to give you the value. And number two, you got to have the knowledge on what's the maximum that you should be offering on a property. Those are the risks for you, the real estate investor and borrower. Now let's talk about the risk for the private lenders, right? Number one, the private lender better know what kind of loan to value they're loaning on that property, right? You got a property that's worth $300,000. Well, they better not be loaning $300,000 on that after repaired value. That's why we give them, we're only borrowing 75% of the after repaired value. Number two, what kind of security are they getting? Are they really getting a deed of trust or mortgage that's recorded on public record? I mean, I'm a private lender. I don't care who my relationship is with. I'm not borrowing unsecured funds. I want my funds secured by the mortgage or the deed of trust. Thirdly, as the borrower, I want and I require to be put on the insurance policy as the mortgagee. And guess what? As the lender loaning money out, if there's a claim against that house, I want my name on that insurance check along with the owner of that property. As the mortgagee, I want to have the right to sign off on that check before who I loan the money to gets that check. I want to be named as the lender on the title policy. I want to be protected. And here is my final word on that. And that is, depending on my relationship with the borrower, I may require, as the lender, a personal guarantee. Okay. So, when I loan money out, depending on my relationship with the borrower, I may or may not require them to sign a personal guarantee. Again, that's going to come down to how well do you know that person? And, in this world of private money, I don't care how many safeguards you got in place. There's this thing called trust. Trust, between the borrower and between the lender. And so that level of trust is going to determine as to whether I require a personal guarantee on that note or not.